My name is Shahid, and I welcome you all. On behalf of Jumtech and Cyrex, I welcome you to this very important panel discussion. I'm the host for this show and also the founder of Jumtech. At Jumtech, we help companies grow through digital and content marketing strategies. And we
Okay.
host events like this to discuss technology, digital trends, and business practices across industries. As you know, the
Okay.
RBI directions provides necessary guidelines for the regulated entities to set up robust governance structure and implement common minimum standards for security controls for digital payments products and services. So we thought of
Oh,
inviting the experts to
good.
address the doubts and concerns of our audience. So here we are with Suresh from Cyrax, who actually agreed to drive this discussion along with Venkat from Cyrex. And I'm equally excited to welcome our guest, Mr. Ratan Jyoti, CISO at Ujjivan Small Finance Bank, and Mr. Akhil Verma, CISO at Airtel Payments Bank. So they will enlighten us about RBI's master direction on digital payment security controls. Before I begin, and hand over the mic to our guest for the introductions, I just want to let you know that you can leave your questions in the Q&A tab, which we will address at the end of this discussion, depending on the time. The discussion should last about 40 to 50 minutes. And if your screen gets stuck, just refresh your screen and you will be back in the webinar. Without further ado, let me invite our guests to do their introductions. And as far as I'm concerned, I have spent more than 24 years with Apple, Intel, Microsoft, and EMC before starting some of my ventures. So let me hand over the baton to Venkat. Venkat, should we ask Mr. Ratan Jyoti to do his introduction?
Good afternoon, and uh, my name is Ratan. And my introduction is only that I am a core student of cybersecurity, having 20 years of IT and security experience, and I have been CISO for last 10 years in two banks, and currently I am in Ujjivan Small Finance Bank. I would like to thank Cyrex and Jumptech for inviting me for this discussion to share my views.
Yeah. And just a small snippet about Ratan. Ratan has the top following on Twitter and LinkedIn from the information security community, and probably largest because of his expert opinions and the information that he shares across a wide-ranging topics in security space. Thank you, Ratan, for joining. We are honored by your presence. Akhil.
Thank you.
Uh,
Yeah, good afternoon, everyone. I'm Akhil Verma, working as a CISO in Airtel Payments Bank. So pretty much I'm having around 17 plus year of experience and entire in banking industry. As Ratan has also mentioned, we are a student, and obviously it's a learner for the. This is a field like it's ever growing, and it can't be say like anybody expert or something. It's always a daily new challenges, new learning, and such type of forum. It's giving a good opportunity to share our views and to understand from the other side like how we have to evolve, and it could be beneficial for the organization itself. So looking forward for this discussion, and thanks for the Direct team and Jumtech team to organizing this thing and giving the opportunity to share our views, our thought process, and interacting with all of you. Thank you.
Thank you, Akhil. Akhil comes from a long years of banking experience, from traditional banks to small finance banks to now payments bank. I think his experience is wide ranging, and will benefit by your insights in this. Uh, Good afternoon, everyone. My name is Suresh Iyer. I'm the founder and the CEO for Cyrax, a cyber risk advisory and consulting services company with a very sharp focus in the banking side. I know our primary focus has been in the banking financial sector, with a sharp focus on banking specifically. and the fintech companies. That's what we do in terms of consulting, auditing, and works like that. And we are Government of India authorized empaneled auditors with certain. That gives us the opportunity to interact with various banks. And in the next course of a couple of minutes, we'll be talking to you about how our regulators are taking this country forward, and how, as the banking community, needs to work in gearing up to that. And that's exactly what this discussion is about. And thank you very much, team, for joining. We are honored by your presence in this webinar. Feel free to ask questions in your chat, and we will make sure that we will take those questions to the experts in the panel here for discussion. We hope to complete this by 3:45, and if it extends by a couple of minutes, pardon us for that. And it purely depends on the engagement level of this discussions and the questions that come through. That will take it a little longer. And with that, I want to quickly give the context across to the evolution of the digital payment space in India. Way back in 2004, the National Financial Switch was launched. In 2008, NPCI was formed to manage the retail payments. That's the first time we had the quasi-regulator set up from the banking space, saying that payment needs to have a specific focus on. Then numerous payment methods started coming in. IMPS, PPIs, RuPay was launched in 2010. Then Aadhaar, direct benefit transfer, came. Overall, the digital economy push started through from then, and since then we have seen an explosion. And how many of us would relate to that? How many times are we logging into an Amazon or a Flipkart or a Big Basket to do our regular transactions? How many times are we actually taking our phone and then taking a QR code and then paying it to a merchant location rather than opening the wallet and taking the cash out? The number of cash transaction withdrawals from the ATMs, how much it has come down. You would see that, this digital economy push has also brought in a very interesting setup. One, in 2017, FASTag was made mandatory for all vehicles for the highway. Bill payments became much, much easier today across various channels available for bill payments. QR code, bill payments, credit card, debit card transactions, UPI, NETC. This has been the way the digital economy has been growing. And as this was going through, what was the Reserve Bank of India trying to do? They had a cybersecurity framework. NPCI had a framework in place, and they were expecting the payment companies as well as the banking and banking associated companies to be following through the RBI CSF. CSF, I mean the cybersecurity framework. But the need for a focus on to the specific importance on digital payment and security on digital payments was recognized by RBI, and they rolled out a circular. It was released on Feb 18th, 2021. The guidelines come into effect from August, and how many companies are today compliant to that? how many people are ready to say that, yeah, we are ready with all that? Is something that needs to be seen. But it's a very interesting phase for as a country for us today. And this applicability is for scheduled banks, rural banks, payment banks, small finance banks, and credit card issuing NBFCs. Now, the what has propelled I spoke about the growth and the growth in the digital economy, how things are changing so high in this space. UPI transactions are just at an all-time high. Bill payments are in the digital space have gone very, very high, and Aadhaar-enabled payment systems have increased with multiple governments adopting that. Prepaid instruments have become the them. I wouldn't call the word mushrooming, but in a good way, that we see a number of operators coming in to us, and of course the traditional card based transactions. Now, this, if transactions increase, so does the risk increase. How does the risk, the operational frauds, malpractices are increasing, and RBI is now taken a very important step in defining these controls in place. The interesting aspect about this is they have brought in a new concept of FSP: functionality, security, and performance. And I want to pause here for a minute, and I want to go back to our panelists here. Akhil, how do you, as a payments bank, how does payment bank sees this circular, and how do you think how do you think payments bank should respond, or are they already following most of it? Things like that. Some insights from you, a short insight from you. We'll get into the specifics, more details a little later.
Okay, sure. So my take on this circular, it's in a two-way. One side as a CISO, specific controls from the regulator sides, which was normally we used to tell as a best practice or something, and to get those implemented in organization, sometimes we need the regulatory push. So one thing it is coming in this circulars. Having said that, whether it's a completely new or entire points or everything, it's the first time they have launched, answer is no. Because whatever I have analyzed this thing, around 55 to 60%, these are the existing controls which was supposed to be complied by any organization. It is starting from the GKC, after that cybersecurity framework, storage guidelines, and everything. Maximum thing, remaining some 15 to 30%, it is like just as an enhancement type of thing. Some are the places we have to just enhance, and remaining part, something 20%, 15%, it will be like it will be new things. Now here exactly what new points it is coming, so that it is giving some good picture. And ultimately, for one sentence or one particular point I have to say about this circular, this is a customer centric. Ultimately, RBI has given the focus to the customer to safeguard their interest. Anything. It could be like we are implementing those things for the bank private security or something, but ultimately it's for the customer awareness, customer related to fraud, related to education, all those things. It has been now properly, it has been emphasizing. So yeah, in this order only, whatever we were doing, again we are reviewing. Again, whatever we are not doing or something, if new thing is there, and we have to implement those things. So that basis only I'm taking this circular in that sense.
Ratan, you've been a veteran banker for many years. How do you see this circular, and how does it affect the SFBs in particular? We'll talk about your experience as a CISO, as and how Ujjivan is looking at it a little later, but more from an overall context of this circular and how SFBs are seeing it.
Yes, Suresh. So if we read the mission statement on which this circular is based, so there are primarily three things that RBI has taken into consideration. The first one is to provide safe and secure banking to consumers. The second objective behind this particular circular is that the governance and risk framework within the bank to manage the digital payment system. And the third thing is that this is the customer centric, and this provides the minimum baseline for the security, not only the security but also the risk management, the fraud management, and the overall the 360-degree view of the entire thing. So this is for the first time that RBI has put all the three things together and proposed this particular master circular. They call it not circular, but a master circular. And so it is a master direction and must be abided by. So if I have to describe in 2 words, I will say that this is the convenience with the assurance this direction have been issued. This is for the customer, as Akhil said, this is purely customer centric, and RBI has always followed the customer first approach. Here also the customer first approach, and the interest of the customer is of paramount importance for the regulator. And so this circular is very, very important and a little bit different from the earlier circulars.
Great. Thank you. Thanks very much, Akhil and Ratan, for providing the opening high-level overview about this circular. We talked about the FSP, and what does FSP mean the earlier directions was, security should be at X. You should do 1, 2, 3 from a cybersecurity framework. But there were operational risk parameters that were separately addressed in the overall guiding principles of Policy Committee recommendations. All of that was there. Now this, as Ratan rightly pointed out, the master circular that's happened. Now the assurance that the payment products are secure. Now it's just not about it's secure, it is robust. So everything that's happening is done after adequate testing. So they're getting into details of how you tested the product before you brought it out to the market. Right? Now, it's just not there. Then they're talking about consistency. So it's just not today it works and tomorrow it doesn't. They're talking about consistency. Now they're talking about capacity so that it is scalable. So that as the economy improves and adoption rate gets higher, it is sufficiently scalable. And ensure customer service description, and both Akhil and Ratan pointed out, it's very customer centric. They're very particular about customer service disruption and the technical outages that happen because of that. And because it is concerning money and it is just not technology, what happens if there is a dispute, and how is dispute resolution done, and how that needs to be taken care? This is the first time actually I'm seeing an overall rounded circular in the reference in the circular for just not one dimension of a control. They are looking at a very 360 view about how the customer feels about this this digital economy, and how can we assure that customer that everything is safe. And as a central bank, RBI is doing everything they can in that. And they're building fraud risk and continuous learning as an important factor that every bank needs to implement in this. I think that's the key aspect of the FSP that I wanted to bring in. Now, with this, I wanted to go back to Akhil. Now, Akhil, you're an industry veteran. You've been in this space for a fairly long time. Now, as a payments bank and as a CISO of a payments bank, how are you looking at implementing this circular? References that can be generic for our audience could be helpful. Anything that is very specific and strategic, you can. I'm sure this is a forum, public forum. and it is not expected out of you for that.
Sure. So one thing, this circular has come on 18th of Feb 2021. That time, we are in phase of that type of corona. Still, it's not it's completely open. But that time it was in between whether it was, and suddenly second wave and all those things started. Having said that, last year also like a lot of digital payment and other things started. Means it was in a boom. Everything it's a brick and mortar type of branches, a different side. Coming to my payment bank structure, where everything it is on a digital side, means no, not even a single brick and mortar branches, and all these transactions, everything is there on the digital platform. Ultimately, for organization like Airtel Payment Bank or such type of thing, where digital is a more, ultimately it is a much more applicable. Having said that, in my opening remarks I told you doesn't mean ki it's all these whatever the 70 controls are there. These are the new which now each and every organization, including us, has to comply with at this point of time. Means pretty much more than 50%, 50 to 60%, it was in compliant state. Maybe some enhancement or some fine tuning, and from some thought through, it is required to review those things. But it was in place. RBI has taken it's like Ratan mentioned, it's a master direction, means combination of lot of other things. So that it was there. Some other things it has come like we need to enhance those things, whatever earlier we were doing. So probably we may require some other enhancement to make our this framework, to make our all means this particular infrastructure as more robust. So that hardly it will be some 15 to 20% it was there. Now coming to the new parts, whatever the new things are there, so that how we have to implement as focus for the customer facing, like some of the controls I'm mentioning it because it's in a public side also, and from the circular only I'm picking. Now they are specifying, they are mentioning that captcha need to be implemented. Earlier as an information security professional, if something it is there, like probably this could be whether anywhere it is written, whether it is a good to go or need to means whether it's a best practice or really we have to do it. So at least now we are having that power to implement those things based on the regulatory side. Second thing, like fraud related thing, a lot of frauds are also happening during this more digital evaluation. Because that also they are specifically mentioning rooted devices application, it should not run on the rooted devices. Again, these are now it's like a regulatory requirement. It's not like we are whether it's our wish. Now it's a regulatory side, and that ultimately where it is going back, it is going back to the customer fraud prevention type of thing. If any, I mean, such type of person, if I'm using any my routed devices and there if it is infected, ultimately I don't know, but that my credential it is getting stealed by someone who has implanted any malware or something, then my account only it is going to be impacted. So again, it's a customer centric again. So all those things all together, and the approach basis now anyway, I'm not sure whether RBI is going to extend the timeline or not. So now we are exactly as I think today, 6 day away, 6 or 7 day away from the completion of this timeline, unless and until they are not. Probably better it could have been for any organization to do that gap assessment, how to implement, whether what exactly my 50%, 20%, and 20% bucket. If really, if I'm complied with something, we can just mark that, take the sufficient artifact. Okay, these are the already we are complying. Remaining thing wherever required from some third party, from internal capability, whatever it depends on the organization, we have to mark that. Okay, this is our roadmap, and accordingly we have to proceed further for enhancement or implementation of any new thing. So that could have been approach for any organization, including for us also. That basis only we have followed. And again, it's like a journey type of thing. One by one control evaluations we are doing, and other organization, I'm sure they are doing it. Some places it would be there like one or two things which is interpretation. It depends on the interpretation basis. My interpretation would be different, your interpretation would be different. So there we may require that regulatory help or something, that clarification. So that case to case basis and depends on my ecosystem exactly how it is working. That may be required for any organization.
I think great insights, Akhil. Uh, this. You pointed about a very interesting example of routed devices. Now, the routed devices is no longer a personal space, right? Because you're transacting your money and you're expecting some level of assurance from RBI. So RBI is now coming up with more clear directions on how things need to be done. Look, if you want to have a robust digital economy, everybody needs to participate and provide their part of it, and they're coming with clear directions on that, and these are very positive developments in that space. Question Ratan, how is SFB seeing it, and how as a CISO you're seeing it, and how do you think Now, looking from your experience and the way compliance is to be managed, what would your advice to be to the banks? And what is your specific approach to that? But it take about 5-7 minutes to understand from you your thoughts on that.
I think
Yeah. So if we read, if we divide, am I audible, Suresh?
Yes, you are.
Yeah, thank you, thank you. I have switched off my camera. My apologies due to bad internet, and I do not have the BCP. I must admit, and BCP is one of the recommendations in this master circular. So, as per as SFBs are concerned, uh, all the controls is applicable to SFB as well. And if we divide, and as Akhil said, that we need to go the control by control. And if I say the domain, the four major domain in this particular circular is, the first one is the general control. The second one is control related to internet banking. Third is control related to mobile banking and mobile apps. And the last one is related to the payment and security. So if the largest control domain is the general control, and where it is required to have a board approved digital policy. And so first I will start with the what Ujjivan is doing on the digital front. And Ujjivan is a digital bank. Primarily, we offer the cashless and paperless banking to our customers. And our motto is to serve the unserved and underserved customer, and for which we feel that digital innovation or digital transformation is the only way to reach to the customer, to serve them. And for that we have tied up with almost 50 to 60 digital partners, and these partners are the neo banks, the fintechs, the payment banks, and a lot of other mediums. We are one of the largest provider of the APIs. We have more than 200 APIs for open banking for our partners, through which they connect and they provide services to our. So it has started. As I said, this is the master circular. So the first major circular that RBI released on the payment system and security was on the information security electronic banking, and this circular, if I remember correctly, had more than 500 controls. But problem with this circular was that this was not mandatory. What does that mean? That some of the banks took baby steps, and others took the giant leap. So there was unevenness in the financial ecosystem, and so there was a need of a circular that mandates each bank to have a similar level of control. And for that, first time in 2016, the CSF that Suresh had just mentioned, that is a famous word in the banking world, that is the cybersecurity framework. This framework has 106 controls, and this was mandatory for all the banks. Means all the banks were required to comply with all the 109 observation of the controls. And even now, every quarter, we all the banks are required to report to RBI how much compliant is there, what is the pending, what is the timeline. And even I feel that most of the bank, depending upon 5 to 10% of the controls are not implemented across the industry. In the same fashion, in 2017, 18, and 20, the circular on access criteria, circular on storage of payment system data came in 2018, which mandated the system audit report, SAR, and data localization for the banks. And then in 2020, the guidelines, the regulation on the payment aggregators was published by RBI. But on some ground, these circulars were not enough. And in the current era, as I said, that digital innovation and digital transformation is the only way to serve the customer. And bank like us, who primarily serve the underserved and unserved category, and then we are trying to go to the mass market, we cannot move without the digital transformation. And this digital transformation should be customized to the customer need, and to ensure that the payment systems is safe and secure, the minimum baseline in the form of master direction of the RBI came, about which just Akhil explained that till on 18th of August, the last date is for the banks to comply, and banks are in their different stage. Most of the banks would have implemented many controls, but I'm sure they would be facing challenge to implement others. Next slide, please. Now, what is key differentiating features? When there was a CSF, which was mandatory, and then the payment storage circular was there, aggregator circular was there. So what was lacking, and what is the new thing that has been introduced in this master circular? I will not touch upon the security in the detail because Akhil has already covered. So this circular talks about the functionality, security, and performance. What does that mean? Today, by security, we cannot win customer. Security alone, we cannot win customer. For example, I have an app. An app is fully secure, but somehow customer is not able to use that app, or that app is not convenient, or that app is not available to the customer. So RBI has introduced for the first time the concept of functionality, security, and performance. In short, it is called FSP. So in each controls, RBI mandates that the system should be thoroughly tested, and that testing should not be limited to the security testing, but also to the UAT, the business testing, the performance testing, and load testing, followed by the security testing. So that when it is released for the customer, they have a convenient and secure way to communicate with the bank and do the transaction. And as all of us said, that this is the customer-centric master direction, and means the customer is the first. Customer's convenience and assurance is kept at the core of this master circular, and everything on that is designed. And most important, and very, very important, that adequate and appropriate review mechanism has been suggested for the bank. That means right from the governance framework, right from the risk management framework, right from the fraud management framework, each framework from the policy to the nitty-gritty has been defined in this particular circular. Next slide, please. And apart from this, the security by design is again the theme of the circular, but there are two important aspects that I would like to focus upon. So this circular talks about the operational risk. So I can see that many guidelines of the Basel has been incorporated. So right from the RCSA and KRI and KPI needs to be defined, not only for the security, but entire banking gamut has to be built. And a repository of the KRI, KPI, and RCSA for all digital channel is mandated at this particular time. So there is some derivation from the Basel guideline I see over there. This circular, as I said, that starts from the general control, and general control is typically talks about the operational risk. So there should be a board-approved digital policy that is first time mandated for the banking industry, followed by the governance and risk management. So risk management involves the risk assessment, this is risk management entire cycle, and to manage the operational risk, there are different tools that have been suggested, and they start from the project and process review, things like BCP, things like the reconciliation. Of course, reconciliation is a tool to prevent the fraud that I'm going to talk about next. BCP, I have just mentioned the BCP has given a lot of importance, because without proper BCP of digital channel, we cannot provide the continuous and good service to the customer. The second aspect is the fraud risk management. So first time the entire gamut of controls have been suggested that to manage the fraud. And for that, the most important control that is mandated by RBI is on the reconciliation and behavior monitoring in the real time. So banks have been mandated to use the tools like EFRM, that is enterprise-based fraud risk management tool, to control, monitor, and contain the frauds in the real time, so that customer is not convenienced much. And as I said, the security by design is the core to this, in addition to this. So next slide, please. So this circular gives you the 360-degree view. And Suresh just asked what would be the challenges for the CISO. So CISO will have, definitely, CISO job today has become very, very difficult, because CISO is a connecting link between the regulator and your own management. So CISO has to take care of both. So people-wise, process-wise, and technology-wise, the improvement in the people, process, and technology would be the primary role that CISO needs to perform. CISO does not need to be on the security leader, but to implement this circular, CISO need to be a great business leader also, and then only he will be successful. Like Akhil mentioned, that right from the CAPTCHA, right from the BIOS password to advanced persistent threat and to the policy, everything is mentioned in this particular circular. And a lot of controls are there, and it would be difficult to implement all the controls in the true sense. So CISO would need the good amount of resource and talent. So retaining those talent is again a challenging task in this. So this was in summary what I view about this master circular.
Thank you very much, Ratan. It's been very insightful. Akhil and Ratan, both active practitioners in a payments bank as well as small finance bank, and heavily in relying on technology and processes that bring about the change and customer-centric experience that is required for the banks to follow. Thank you very much. I am asking my colleague Venkat. Venkat, you've heard this. Do you think there is anything else that, from a high-level snippets, do you think there are other aspects of this circular that's probably that needs to get covered?
No, I think Ratan and Akhil, all three of you have covered almost everything very specifically. I think in depth, from the capture point, multi-factor authentication, and the jailbroken or the rooted devices being checked, I think everything is captured. One additional thing that I'm just seeing is that I think now it's going to be time for the from the mobile banking, where the app from the banking side, they have to enforce the customers to update the app even before allowing a transaction. If there is going to be a security update from the bank for the mobile application, I think it's going to be mandated by the end users to be updated even before initiating a transaction. That's, I think, the only thing I want to add. Everything I think has been covered.
Okay. Thank you. We have our participants asking a number of questions. Akhil, Ratan, can we go and look at them now? Venkat, would it be possible for you to?
Sure.
Before that, before going to the questions, any specific points, Akhil, that you think that you want to add in here?
So yeah, it's well summarized, and whatever one left out point was there. Yeah, force update of this app, they have specifically mentioned if any updated old updated version not more than 6 months, it should continue. Yeah, here also some interpretation was there whether it should not continue on the Play Store or the user user mobile, because some of the bank I'm discussing, so different interpretation. Somebody was telling, okay, we will just remove it from the Play Store, but no, I think interpretations from the RBI side, it should be forced update from the end user device, not just for the hosting purpose. Second one interesting thing was there. I'm not sure how the other banks or other peoples are taking those things. They have mentioned one point like checksum value, just to check that integrity. Checksum value should be hosted on the internet, and before transaction, these need to be validated. So this is a new point, like to check that whether app cloning, whether any such type of thing it has not been done, like any non-genuine app of the application, rogue app type of thing, any requests are not coming. So this is also another one feature means a thing, and this is the not a, you can say it's not a discretionary may type of thing, because after that again RBI ask some return. They have asked, okay, if it is a may consider, then whether bank is taking that thing and how much timeline, all those things they have given some flexibility, but this is the point where they have not considered that bank may consider. So I'm not sure means exactly this thing means how the different banks are, how others are taking, but yeah, these are the couple of good points which is means it's a positive.
Yeah. See, as the hacker is getting intelligent, so must be the regulator trying to see that they are prevented, right?
True.
That's the so the master bank, central bank is taking that initiative. I think it's good for the overall good for the country. and it improves the overall assurance to the
Yes.
end customer.
Yeah.
Closing remarks from you before we go to the Q&A, Ratan?
So we have discussed most of the thing, but what we have not discussed, suppose the RBI says that there should be a tool to prevent fraud. What if fraud happens? So for that also a lot of direction has been given to the bank from the grievance readdressal piece. So that would I would like to mention that we have missed that. So for a customer, a lot of tools have been given in each scenario, and so this circular is a customer-centric circular.
Great. Thanks very much. Shall we go to the questions, Venkat?
Yeah. Maybe read out the first question. This is from Varshini. Thank you, Varshini. The question is, I'm not from the banking industry. As a layman, will this reduce frauds? Very simple, direct question. So I think from the customer side, they are expecting that will this reduce frauds?
I'll take this. It will reduce frauds. If the implementation is proper, it is likely to reduce the frauds. Just a small pointer here. While the quantum of frauds in India is still, when compared to the global scale, the percentage year-on-year growth on frauds in India is the highest in the world. Okay. Now the context is very with the booming digital economy that's happening here, and adoption of technology as a first in the world happening here for many instruments in India. It is very important that these practices are implemented in full so that frauds can come down. So the short answer, frauds will come down.
I will try to add what Suresh said, and he put the things very rightly. So if we read this circular first say that we should have a policy on the fraud. Banks should have a defined policy on the fraud, and the second thing, for fraud prevention control, they should have tool to detect the fraud. Third thing, they should have the reconciliation, and that reconciliation should be on the real-time basis. And fourth, even if that fraud happens, their provision of penalty or grievance readdressal is defined. So if we take this, so this time the regulator has tried to manage the fraud holistically. So obviously the fraud will be reduced.
I'll add one more point here. Means Ratan and Suresh, you have mentioned from means bank implementation per se. I'll mention from the customer per se also. Definitely, whether it will be reduced depends on the bank, how bank is implementing, how the controls. It's not like if anything has come and we have taken as a compliance take, and then it is going to get the proper results. May not be if we are implementing. Second part is there, which is very well articulated in the circular and mentioned, customer awareness. Again, after implementing a lot of good controls at the technology side, after that, if customer is not aware, and then like presently phishing and all those calls are happening and people are compromising their credentials, then again those factors it will start. So it is like good, it is we are making life difficult for the fraudster, so that it comes from the technology per se. But again, at the same time, this customer awareness, again, it's very much important, which user always it should be aware.
Okay. I think, yeah, thanks, Ratan and Akhil. I'll move on to the next question here. An interesting question from Tejesh. He is from the e-commerce industry. So, is there anything from this circular that he should note as they integrate with digital payment systems? With across the payment card and maybe across in terms of the smaller payer app, PPIs, etc. What should their responsibilities and what should they look out for? As far from this circular, even though it's not explicitly mentioned that it's for them, is there anything for the e-commerce space?
Okay. And we also have Vijay Krishnan asking a related question. I'm part of the government treasury where my application is integrated with multiple banks and aggregator. What is my role in ensuring compliance with the circular? Okay, I think we will take this question into a larger question of interfacing parties. and what are the compliance requirements to that? From the when Ratan pointed out, he has over 200 plus APIs, and the compliance to that, and how that is being addressed across, and how data is flowing between one place to another. How Akhil and Ratan, any comments from you on this?
Yes. I will start and then Akhil may add. As you said that we have 200 APIs, but my API need to be consumed by partner API, and partner would be the fintech, the neobank, the payment bank, or any other partner. So if I have implemented authentication on my API, or I have implemented the mutual SSL or TLS handshake, unless the partner implement the same control, it will not be successful. The second thing, inside the part. So my digital cannot stand alone without the primary channel, my CBS and the loan origination system and all. So if I have put the authentication in my API, I need to put the authentication in the primary application as well. So if this circular is implemented in the real sense, whole ecosystem will have the authentication and security control. So my partner, the fintech partner will be secure, the bank digital thing would be controlled, and bank internal system would be secure. So it is a holistic approach by RBI to make the entire ecosystem secure.
Great point.
Correct. So perfectly articulated from this implementation per se. Again, as a very generic remarks, I will tell it. For any industry, means whether it's like the circular has been given for a specific category of the bank, scheduled bank, payment bank, small finance bank, and other thing. But still, it is a good opportunity for any organization, whether they are coming under the purview of this or not, as a best practice. As a like, it should not be like regulator should come with a stick and then only we need to start. This is a really good advantage for to introspect the exactly whatever the controls are there in any organization, such any digital. It could be in a payment aggregator or anyone, applicable, not applicable. They should start this thing, and it will be definitely as a completely for the country perspective. Whatever the focus is there to reduce the fraud, I think everybody is having the same responsibility, and accordingly, this should be implemented in that good sense.
Thanks, sir. We have an interesting question from a fintech partner here. Mitesh Thakur, co-founder of Miss Call Pay. His question is, with security being compromised on smartphone, do you think feature phone voice-based payment will make payments more secure? As even rooted devices will not hamper the security of the transactions. This is a new channel which is using feature phones and voice-based authentication. The question is, will that improve the security of the transactions? My short answer is, from a pure play security, yes. From it needs to be seen from a adoption perspective, how the market reacts. But of course, there is a consumer for every segment. I'm sure there will be more adoption on this new channel as well. Your thoughts on that, Akhil and Ratan?
Yes. So this is a way. Feature phone is certainly today secure than the new generation phone. But rather than moving backwards, we should try to move forward. And in that, the control suggested in this master circular, by name the security by design, plays a very important role. Rather than seeing whether the phone is secure or not, we should develop the app that will work even in the insecure phone. So while designing the software, we should use the right kind of SDK, and this technology is available for last few years. If we use the right SDK and follow the security by design principle, even if the phone is compromised, the impact would be very, very less.
Right. So we are at 3:53, and we promised you we will close in by 3:50. We'll take another two questions, And so the penultimate question, Venkat, you want to?
Yeah, I think I'll go for the penultimate one. Hemant, thanks, Hemant. His question is, to be very precise, how is this policy or how is this circular going to increase the scope of the audit landscape for the banks?
So debt by audit, is it going to increase? Huh? That's the question, right? Uh, you know, so we are a pain in wherever, with the number of audits, I'm sure you spend about 3 to 4 months a year handling audits from regulators as banking CISOs. Is this going to increase the audit landscape? I was reading through the various SARs. If SARs can be combined together, then it can be a unified effort. But this is just a consultant's viewpoint. But I'd like to see a practitioner's viewpoint there.
Yes, so I will start. Today, SAR is a complete audit. It is just the output is just not the data localization, but SAR is a complete audit. But as I said that the earlier CSF was having 109 controls, so number of controls has been added to master circular. So scope of the SAR would increase, but SAR would continue to be effective, and SAR needs to be carried out with more and enhanced scope. That is my short answer.
Yeah, exactly. I'm aligned with this because it will enhance that whatever earlier things was there, and it has been included some new controls in this circular that will be added. But yeah, SAR is completely separate thing, and as Ratan mentioned, it's a complete audit that will continue. It will not be like any replication or something. It will not be override. Definitely, it will continue.
Okay. So the last question.
This is from Zubair Ola. The question is, what is the alternative for OTP as mentioned in the circular? I think interesting one. And how, even if it's there, how are the customers, how is it going to be consumed by the customers, and how it's going to be planned? I think leave it to Suresh, Ratan, Akhil.
Okay. I will try to answer this. This is a very good question, and we are moving towards the passwordlessness and OTP-lessness. What does that mean? So OTP is still static. OTP is difficult to guess, difficult to hack even now, but OTP is static. So what should be the solution? So solution should be some kind of behavior analytics, some kind of authentication that happens continuously. Like blockchain or the behavior-based authentication is the future. And as we are moving towards the passwordlessness, I am sure in a couple of years we'll be moved towards OTP-lessness.
Yeah, the out-of-band authentication, in its strict sense, without a digital handshake, it happens, and therefore, the purists on cryptography and authentication would actually come back and say it is not in real sense the perfect authentication because SIM spoofing and so many other things are possible, and therefore OTP, why is it a good or not? And Ratan pointed out, we need to move to that passwordless method of authentication where continuous engagement is there. So if I know we have a number of questions, I would do one thing. We will take the questions unanswered and try to get back to each of you with the answers for you. So your questions will not go unanswered. We will make sure that we write and send back to you. But we have to start on time and end on time. So with that, I want to say thank you very much, Akhil and Ratan. Both of you, as industry practitioners coming to the space, has added a very interesting dimension. And thank you for providing your knowledge and insights, both as a practitioner as well as an industry expert. And thank you very much, Shahid. for setting up this platform for us. And it was very, very useful. And thank you very much, for the team, for coming in and participating and listening to us talk on this subject.
Yeah, so Suresh, before we end this, I also would like to tell our audience thank you so much for coming in. They were actually quite eagerly waiting for this discussion, especially knowing when Ratan and Akhil are on the show. It's an honor to have you on our show, gentlemen, and learning your thoughts and approach to master directions, which will benefit our audience. And yeah, and we look forward to having you again on similar topics. So thank you so much.
Thank you. Thank you so
Thank
much.
you.
Thank
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 you.
you.
Thank you, Ratan. Thank you, Akhil. And thank you, team, for participating and listening to us all this while. We will end this webinar now.
Thank
Thank
you.
you. Thank you, everyone.